Are you looking to take your personal finances to the next level? Well, you're in the right place. Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not, with your host, Joseph Sangle.
Well, welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. My name is Joseph Sangle, and I am fired up to help you along your money journey. We call it a fully funded life. And today, we're on episode number
138.
Yes, and tell everybody who you are.
I am Megan, the co-host.
Yes, you're Megan Hibbard.
With you today.
The co-host. And episodes in 137 other episodes, and now the 138. Yes. Almost all of them. We haven't been in all of them, but almost all of them.
I took a minor hiatus to have a baby. But.
Yeah, and we also, I wasn't even thinking of all that. I remember we've had some interviews like with my nephew when he paid off his house and all that stuff. It's been fantastic. Mm-hmm. And today it is February 22nd. We are on episode 138. It is unbelievable. We're close to 3 years worth of podcast episodes.
That's wild.
We have been doing it more than 3 years. We started out with every 2 weeks, which is awesome. Tell everybody what we're going to be talking about today.
Yes. So today is a great episode. We're talking about what is a mutual fund. It's a question we get all the time. How do I invest? What should I start investing in? What is a mutual fund? So our question for today is, my retirement account at my new employer has lots of options, and most of them are mutual funds. Forgive my question if it seems elementary or basic, but what exactly is a mutual fund? Thanks. It's not elementary or basic to ask.
It is elementary, my dear Watson. Isn't that what Sherlock Holmes always said?
But it's a great question because we get it a lot.
And you know what? That's where we start. And we say this all the time, that no one talks about a foundation until there's something wrong with it. And knowing what a mutual fund is foundational to investing. And so we're going to talk about it. It's going to be great. Before we do that, we're going to go to that fun part of the podcast. You know what that is. Let's go.
Now it's time to get caught up with our current money events.
This portion of the podcast is sponsored by Fully Funded Life. Are you ready to win with your money today? Join Fully Funded Life and receive way more than just financial help. The Fully Funded Life team will help you when it comes to the 4 C's. Number 1, courses for quick instruction that move you swiftly to applying the lessons learned. 2, challenges for a fun way to intensely focus on a specific part of your money journey. 3, coaching for wise counsel so you can speed up your journey to your fully funded life. And 4, community, because it can be difficult to find people in the same mindset. This community is formed with a diverse background from all over the world, with people who are working to achieve their fully funded life just like you. So learn more today by visiting fullyfunded.life and start climbing up the fully funded life now.
Awesome. That's awesome. Climb up that ladder. So today's current money events topic is about tax refund season. It's tax refund season. Isn't that great?
It is.
And, because of all the money being distributed by the IRS, they didn't let people submit their tax documents until about the middle of February. And so we did an episode on maximizing your tax refund recently. We'll have a link to it here in the show notes. But I wanted to make sure that we had this here, current money event, to remind you that this is an opportunity to shoot up the I Was Broke, Now I'm Not ladder to your fully funded life. That's what this is. Very rarely do you get a large chunk of money, at least for most people. And when you get a large chunk of money, sometimes it allows you to do something you would not ordinarily do, or to go out of order in some of the decision making. For example, if you can totally and entirely eliminate a debt, that's not a bad decision. Even if you don't have a full 1 month's emergency fund. Because if you can eliminate the rest of a car payment, let's say it's $2,500, and you've been paying $500 a month, well, and you get a $2,500 tax refund, the instant you pay that car off, you're going to free up $500, which you could quickly use to build up your emergency fund. That's not a bad decision.
Yeah.
And so I just want to ask you, as you're driving in your car, you're working out, you're walking, whatever it is you're doing when you're listening or watching this episode on YouTube, what are you doing with your tax refund to help you navigate and take your money to the next level? That's what this current money event is all about, because there's so many things you can do with it. Go on a trip, buy something nice for someone, maybe like you. It could also be something that you can use to wipe out a debt, to make an investment, to be able to start a business, to put towards the down payment on a house, to be able to prepay a major expense like a vacation, whatever it might be. I want you to, in your mind, clearly know what you're doing with your tax refund, because it is relevant right now to a whole bunch of people, maybe you. And if it is, clarify it now. If you need to, go listen to that episode of the podcast again. It'll be very helpful to you in maximizing every dollar of your tax refund. And that's it for this very fast current money events section.
And I will say in that episode, we break down how to do examples of that, how to, we have these 3 examples and we use our mini budget and we show you exactly how to do it, which is super helpful. So if you're in that boat and you're trying to maximize your tax refund, or you got a stimulus check and you're trying to figure out what I should do with it, the mini budget could be a great place for you to start. So make sure you listen to that episode.
Do that.
Yep. Okay, our success story this week comes from Jeff. And 1 month after attending an FLE, he said, our biggest win, we closed on a sale of our home shortly after taking the class. We made a pretty decent chunk of cash on the sale. Thanks to the FLE, we knew what to do with it. To the ladder. We were about to put aside 1 month's savings and knock out roughly $18,000 in debt. We also have a down payment ready to go when it's time to buy. Also having a good chunk of debt out of our lives and having our savings bumped up has brought a sense of relaxation to this house.
That's awesome. And I think that's really the perfect example of what we really want to be able to provide for people. Mm-hmm. And that is a financial roadmap. We need a financial roadmap. We need a coach to help us navigate it. When you're navigating your finances, you're trying to go to a place you've never been before. You're trying to go to some level of wealth. You're trying to go to the funding of the dreams you have in your heart. And that's going to take money that you don't have today. Mm-hmm. That's why you're making new decisions to invest in all that. And so Jeff, he did that. And he had a large chunk of money coming his way because he had paid off, closed the sale of his home. And that gave them the opportunity to go straight to the roadmap, the I was broke, now I'm not ladder, and clearly know what their next steps were. And what I love is he sums it up by saying it's brought a sense of relaxation to this house. Mm-hmm. Great way to phrase it. Yeah. We would say also it brings peace. It brings confidence. Mm-hmm. It brings great ability for the future. It brings clarity. It allows you to see. It gives you vision. And so, Jeff, thanks for taking the time to email that to us. This podcast is powered by your success story, and we're grateful that you took time to write this to us. Any other observations you'd like to share about that?
I would say, they were able to accomplish multiple things. So just because you get a big chunk of cash doesn't mean that you can only do one thing with it. That's why we really encourage you to do the mini budget. But he was able to put aside 1 month's savings. He was able to knock out $8,000 in debt, which is huge. But then he was also able to have the down payment ready when it's time to buy. So he's, knocking out things. He's doing the savings. He's knocking out debt. And then he's also preparing for the future where he's able to, when that house comes, if you know the housing market, things go really quick and you need to be ready. So having that down payment ready to go is huge, because when they find that house, they're going to be able to move quickly because they put all these pieces in place.
It's outstanding.
Which I think is great. So yes, congratulations, Jeff. We can't wait to hear when you buy the house. That will be awesome. Okay, our question for today, remember we're talking about mutual funds. It's going to be fun. So our question is, my retirement account at my new employer has lots of options, and most of them are mutual funds. Forgive my question if it seems elementary or basic, but what exactly is a mutual fund? Thanks.
Well, this is an excellent question. And yes, it might be basic, but we all start with almost no knowledge of investing.
Right.
Like, when did you first hear the word mutual fund and it made sense to you? College?
I definitely heard it in college, but I would probably even say after, maybe when you get your first job.
And you have a retirement account.
And you're starting to, it's the same problem that our question is having, not problem, but the same question that he's having of, I have all of these options. What do I do? How do I know what to do when it comes to investing? And so I feel like you might just be starting out in your first job, and this is the question you get there day one, and HR is talking to you, and you're like, what?
Yeah, foreign language. Every company, every organization has their own inside language.
Yeah.
Like we do here at I Was Broke, Now I'm Not. We say Westcam. Mm-hmm. Everybody listening doesn't know what Westcam means. We know exactly what it means. It's the first 6 words of our children's book, What Everyone Should Know About Money. Mm-hmm. before they enter the real world. It's actually for high schoolers and college somethings. And we call it Westcam because we don't want to say what everyone should know about money before they enter the real world every time. But we call it Westcam. And I remember when I was just starting on my financial journey, and words like mutual fund and mortgage and filing my taxes were literally a foreign language. I remember trying to buy my first house, and my dad told me to go down to the bank, and the banker asked me, well, I'm sure right now I could immediately answer the questions. I not only didn't know the answer, I didn't know what he just said. Like I didn't know what the question, and I realized this was just like my engineering exam. I had no idea what they were asking. And so I really wanted, I know now, I do know what it means now. And so I'm going to help our podcast listeners.
That's good.
I finally figured it out at 46 years old. Okay, so the word mutual fund, let's look at it. If you're watching on YouTube, you're going to see these words, mutual and fund. There are two words.
There are two words.
Yeah, mutual and fund. So what does mutual mean?
Yes, it's an adjective, and it means of or relating to each.
Oh, wait, time out. So it's an adjective.
Yes.
Which means it's a descriptor. It describes. So mutual is describing something.
We're also giving you a grammar lesson.
Okay, here we go.
This is good.
Yeah.
Okay.
Yes.
Of or relating to each of two or more, held in common, shared.
That's really good. So it's shared. It's held in common. It's of or relating to each of two or more. Okay. So mutual, we just look at that word. Now we're going to talk about fund. What does the word fund mean?
It is a verb.
Yes, it is a verb, which means it's got action with it.
Yes.
So if it can function as a verb and as a noun. We're going to look at the verb side of it.
Okay. And the verb side of it is a supply of money or... What are you laughing at?
I set you up to make you pronounce this word. I didn't want to read it.
What did you pronounce it?
No.
Why not?
You can watch it on YouTube. I don't know what this word is. I remember pulling this up on Dictionary.com.
Unbelievable. You put a word in there that you can't even pronounce. Or resources as for some purpose.
So to tell everybody who's listening, it's a supply of money or pecuniary, Pecuniary. I apologize to all the enunciators, but it's pecuniary resources as for some purpose.
It is peculiar.
Is that cleared up? So a mutual fund, so to fund it means it's a supply of money. Like you supply money. And so a mutual fund would mean that it is the financial resources of many people, two or more, but it's many, sometimes millions, who have mutually contributed money, pecuniary resources. They have mutually funded the effort. Think about it for a minute. Suppose you and three friends decided to start a business. Megan and friends, what are you making? Let's create a business right now.
We are creating cups.
Cups.
Because
okay?
I'm looking at
Megan and
cups right
friends
now.
cups.
Cups.
Okay? It's a cup business. It's amazing.
Business.
And
Hey,
the
these
startup
are
costs are
very
going to be $25,000 for Megan and friends cup business. She's got three friends, and each person contributed money to the business startup costs. So one friend contributed $5,000. Two of your friends contributed $10,000 each, and you threw in $10,000. What just happened? You and your friends mutually funded your investment.
Yep.
Do you see that? So a mutual fund is this exact same scenario, but on a much larger scale. So that's what a mutual fund is.
Yeah. And I feel like another way is we talk about diversifying your investments. And yes, you should have diversified. There's lots of different options. There's real estate, there's multiple things. This is just one. But with the mutual fund, it allows you to not have all of your eggs, quote unquote, in one basket. So with a stock, you feel it when it goes way up and you feel it when it goes way down.
Yes.
But with the mutual fund, the chances that every single business in that fund go way down at the same time, not as likely.
Not as likely.
It's a little bit less risky.
Yes. And just like your business startup, there is an objective. In this sample you came up with, you're making cups.
Yes. Great cups.
Yes, great cups. Very successful.
I love my insulated
Just
cup.
like your business startup, there's an objective for each mutual fund. And this can also be known as the charter. And that objective or charter guides what the mutual fund manager or management team, sometimes it's a single leader, sometimes it's a team of leaders, it guides what they're actually allowed to invest the funds into and what they are not allowed to invest into. Mm-hmm. So, for example, it might be a charter to invest in emerging markets, or maybe it's another for domestic growth stock companies, which means it has to be American-based, domestic. It could be domestic growth and income funds, which means they're investing in companies that should be growing, but also are producing profits and paying those profits in the form of dividends, thereby creating income for the shareholders, the people who have mutually funded it. You could also have an international income funds. Many of us have heard of index funds. And those mutual funds invest in all of the companies that comprise a certain index, like the Dow Jones Industrial Average, which is 30 very large companies. Mm-hmm. The S&P 500. How many companies are in the S&P 500 index fund?
500.
500, that's right. And then there's the Russell 2000. How many companies are in that?
2,000.
2,000, yes. So I wanted to show, and if you're going to watch on YouTube, or maybe if you're running and listening, maybe you can go back and watch this, but I'm going to actually go to a couple of mutual fund companies' websites and show them what I'm talking about. The first one is the Capital Group's American Funds. And here we are on the website, and under what we offer here, they offer all types of retirement plans. So I think it's important to stop there and say, you can own a mutual fund without it being in a retirement account. Mm-hmm. Many people think it is only available through a retirement account because they have them in their retirement accounts.
Right.
But you can buy into a mutual fund for a dream that's before retirement without having it in a special account. That's tax advantage. And so you look here and they have mutual funds available. So I'm going to click on those. And what I really like here, and I'm going to zoom in on it a little bit for everybody, is they've been doing this since 1931. Now, for full disclosure, I do own several American fund mutual funds. If you work with Edward Jones, an Edward Jones advisor, you probably own some American funds. They work collaboratively with them. But here's what I know. When I look at this investment spectrum, you can see that there's growth in income, equity income, balanced, taxable bond, tax-exempt bond, and money market funds. And you can see below what their objective is. So, for example, in growth funds, they seek to increase capital long-term through growth-oriented companies. But if you look at the tax-exempt bond, they seek tax-exempt interest through municipal bonds, which municipal bonds are simply money, debt, that could be a school that's building a brand new building, and they take out bonds. The money comes from, it's mutually funded by us, mm-hmm. and they agree to pay back a certain amount of interest and eventually pay back the bond. So underneath here, American Funds has listed all of their funds that kind of fit in those categories. And so I wanted to take a look at one of them in particular, and it's the Investment Company of America Mutual Fund. Now, I am an owner of this fund, for full disclosure. I've been an owner of this fund for over 15 years. And so I just wanted to kind of show this, and this will be interesting. And one of the things that I see is, as you look at it, you can see that it has been around since 1934, since January 1, 1934. And in its lifetime, it has had an average return of somewhere around 12%. We're going to find out this fact right now. In fact, when we look at it, it was formed in January 1, 1934. Is that a while ago?
That's crazy.
Okay. And it currently has $109 trillion. But wait a minute, I'm wrong. $109 billion then. $109 billion is
still a lot.
And there are 198 plus companies, stocks in it right now. Mm-hmm. And there are currently 2,033,052 shareholder accounts in this mutual fund. So when we say it's mutually funded,
it is mutually
between two of us and 100 and
your closest friends.
1,998,998 of our closest friends. And they pay out dividends for any companies that are held that pay dividends. They pay them out March, June, September, and December. They have a minimum initial investment of $250. And what I think is interesting when you look at them is their returns since the fund started. The compound annual growth rate is 12.01%. Pretty good.
Yeah.
And then what I like about this is you can look at their holdings. In fact, as you scroll down, there's a lot of information, and it talks about they have management. They don't have one manager. They have multiple managers, and they look at all the years of experience with the fund and with the capital group and in the industry. And I mean, they have been around, all of them, minimum of 24 years in this type of industry.
That one had 40 years.
Isn't that awesome? And then when you look at it, they have breakdowns on what they've invested in, and they show their top stocks. As of the time that we're recording this podcast, Microsoft is their number one holding. Broadcom is their second largest holding. Facebook, their third largest. Amazon, their fourth largest. Comcast, Alphabet, who owns Google. Google is known as Alphabet.
I didn't know
and
that.
then Abbott Laboratories, Home Depot, So what are the chances that Microsoft, Facebook, Amazon, Alphabet, which is Google, Abbott Labs, Home Depot, Netflix, and Apple, Broadcom, all of them go broke overnight?
Yeah.
If they do, the world as we know it is over.
Yeah.
Now, they also own a lot of other holdings. And what I think is awesome here is you can actually click and you can download and see all of their holdings, as I'm showing here. In fact, you can go through all of them. And their smallest holding that they have, I don't know if these are sorted in order by market value, but their dead last one is Vontier Corp. It's 0.01% of their holdings. I don't know who that is. They have a small holding in Airbnb, Kraft Heinz, Fortive Corp, Newmont Corp. I don't know any of these. Analog Devices. I know about air products and chemicals, but I'm just sharing this to say, you know, they have, in this one, 206 holdings right now.
Yeah.
And so it's a mutual fund. It has been mutually funded. And as the collective value of these companies go up, your investment value will go up. As the collective value may decline, it will go down. And as these companies make profits and pay them out, you get to receive your commensurate share. So if you own 1/1,000,000th of the share, you get 1/1,000,000th of the income. Does that make sense?
Yeah. And I feel like it also gives you a look into a lot of companies that you would never know about. So like even Joe saying there's companies in here he's never heard of, but it gives you a wider reach to companies that you wouldn't have. The chances of you guessing all of those stocks and investing in, investing in those companies is like,
I think it's a great statement you said there. You know, these managers, they have more degrees than a thermometer, and they eat, sleep, and breathe this stuff. They're going to know about these companies at levels you and I will never know.
Yeah.
And so they've made these choices, and you know what? It's worked out really well over the life of the fund, 12.01%. Should we show another one?
Let's do it.
Okay. So let's look at another example of a mutual fund that I own, and it is offered by Dodge & Cox Funds. And I'm going to look at the International Stock Fund because I think that's fun. Because, they're based in America, so the funds that they hold are not in America. They're right. They are international. And so I just wanted to show this. And what I think is interesting is this objective of this fund is the fund seeks long-term growth of principal and income. They invest primarily in a diversified portfolio of equity securities issued by non-U.S. companies from at least 3 different countries, which may include emerging market countries. Do you see that? And so the fund is not required to allocate its investments in set percentages in particular countries and may invest in emerging markets without limit. Under normal circumstances, the fund will invest at least 80% of its total assets in equity securities, stocks of non-U.S. companies, including common stocks, depository receipts evidencing ownership of common stocks, preferred stocks, and a lot of other stuff that starts to go to 401 and 501 level of investing.
Yes, we don't want to lose you.
So this is interesting because I think the more you read about your investments, the more confident you will have, more confidence. And so what I like here is you can actually download a fact sheet. And so it says fact sheet whenever you click on this. So I'm going to click on this fund, and there's literature here, and I can find a fact sheet. It's right here, and you can download it as a PDF. And we're just going to pull up this PDF here. And it shows the similar information that we just saw for the American Funds Mutual Fund. And so when I look at this fact sheet, it says that there are 69 companies in this one. So again, we said the average mutual fund has 200 to 1,000 companies. This one only has 69. And right now they have 98.4% of their money in companies' ownership positions. Only 1.6% of their money is in cash. And when you look at it, 37% of the market value is in Europe, excluding the United Kingdom. 16.4% is in the United Kingdom. So about 53.4% is in what you and I would call Europe. And then 15.1% is in Asia Pacific, excluding Japan. 13.1% is in Japan. And remarkably, they say that there's 5.9% in the United States. So that's confusing because it's an international fund. So it could be that a U.S. company purchased that asset and they just haven't rotated to sell it yet. And then when you look at it, their top holdings are Samsung Electronics in South Korea. We've heard of that.
Yes.
What about ICIC? I don't know if I pronounce it right. ICICCI. You see it? Bank in India. Never heard of it. BNP Paribas, SA, France. I've seen them. That's a bank in France. Credit Suisse Group, Switzerland. Sanofi, France. Sanofi is big time known right now. What do they work in? Vaccines. Number one vaccine distributor in the world, I believe. And so they've been a part of this vaccine distribution. Novartis AG, Banco Santander SA, GlaxoSmithKline, UBS Group, Mitsubishi Electric Corp. And so I just think it's important for us to help you understand as investors, and we want every one of our listeners to be investors, to understand the type of mutual funds you have and to understand what is held within them. Because I think many of our listeners, they don't own individual stocks yet. And they're like, man, I wish I owned Apple stock. Well, guess what? There is a high likelihood that you own a lot of Apple stock. It's just within your mutual fund.
Right.
They may say, man, I haven't benefited at all from Google and Facebook's growth. And then you go look in the portfolio and you find out you've benefited a lot, and that's why your fund has went up. And so I hope that makes sense. That's what mutual funds are. And I encourage you to continue your journey by actually investing in them, because as you do so, as we all know, your heart will get connected to that money, and it's going to force you to become more knowledgeable about all types of investing, especially this very important one. What would you share?
I mean, I think don't let it become overwhelming to where you don't take a next step. So a lot of times you look at investing, or you look at mutual funds, or you look at, I don't know what to do, so I'm just not going to do anything. But if we've learned anything from this last year, we've said the market went way down in March. Yeah, but then it went way back up. And so we want you to be able to enjoy the benefits of that. It might go down again. Who knows? Might go up again. Who knows? We just don't know, but we want you guys to take a first step. So maybe your first step is investing in a mutual fund. Maybe your next step is looking to see what you're already invested in and to do some more research about that and to find out the companies that are involved in the mutual fund that you're in. Or, maybe you want to take that next step and invest in a stock. Like whatever your next step is, it's going to be different for everybody, but making sure that you're taking your next step this week. We really want to encourage you guys to do that.
And I think that this is really important. You were talking about just take a step. They recently did a study that showed this statistic that only 52% of people in America have exposure to the stock market, whether through individual stock holdings or mutual funds. And that means as all of this stuff has grown rapidly over all these years, it means 48% of people benefited zero from that. And so I think that's a crying shame. And I really believe one of the biggest reasons for that is lack of education. So today we just encourage you with this podcast to share it with others. share this YouTube video, comment on it, hit the reminder bell, any comment, you agree or disagree on any of that stuff, or if you have a recommended mutual fund, comment on there, because commenting causes Google Alphabet to share it with other people and help them be able to find it. So I encourage you to do that. Tell everybody what our verse is for today.
Yes. So today our verse is Proverbs 13:11, and it says, "Dishonest money dwindles away, but whoever gathers money little by little makes it grow."
And I like that, because we've seen people who get money dishonestly and it goes away so fast.
Yeah.
Because they didn't work for it. They don't understand the value of it. But whoever gathers money little by little, that's who makes it grow.
Yep.
So I just want to encourage you. You may not have a lot of money, but you have a little, and you can do little by little. And if you do it, it will grow. Tell everybody what we're going to talk about next week.
So next week, if you are interested in this topic of investing and taking next steps in that category, we're going to be talking about making money while you sleep. So we're going to be, if you've been around us at all, we call it oxen. So we're going to talk about oxen and how to make money while you sleep. So it's a great episode. Make sure you tune in. It's going to help answer a lot of questions if you're interested in making money while you sleep.
That's awesome. Hey, thank you so much for joining us today. It's Monday. Go after it. Change your financial life. Climb up the I Was Broke, Now I'm Not ladder. Consider being a part of Fully Funded Life. Fullyfunded.life. Have a great Monday.
Thanks so much for listening to this episode of the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit IWBNIN.com. We'll catch you next time.